had some big calls. This year, by October, you were projecting 307,000, kind of in line or not too far from Max Kaiser's projection for the year.
I'm going with $220,000 per Bitcoin.
I try to always lead in with any prediction with that awareness that nobody has a crystal ball. I do think that we are still on track for a large all-time high in Bitcoin. So this would be above the local maximum of 64,000 that we hit a couple of months ago. Something that was unforeseen, for me at least, was this mass mining exodus out of China. This is a net benefit to Bitcoin in the long run, and that we're actually decentralizing mining outside of a single jurisdiction. But in the short run, this has a big impact on hash rate, forces a lot of selling to cover the logistical expenses of moving the miners. So I think that that was a bit of an anomaly in the projection for me. I would say the only thing I would change about the prediction, I still think $307,000 is in the card for this price cycle. The caveat I would add there is that I think the price cycles themselves will start to break down. Perhaps this is the last cycle. And when I say cycle, I'm referring specifically to the price action mapped over the Bitcoin 4-year halving cycle. Because what's happening is that every time that the new issuance rate of Bitcoin is contracting by 50%, which has historically driven these huge price run-ups, and then the market gets out over its skis, so to speak, and then has huge drawdowns. It's been driven by this supply and demand dynamics of the halving cycle. But with each contraction in the new issuance, it becomes less of an overall component of the selling of Bitcoin. So the miners are selling less and less Bitcoin to cover costs over time. And if you couple that with the maturity of financial markets and capital markets available to miners, such that they don't necessarily have to sell their Bitcoin as much, I think that the halving cycle could become less of a contributor to the price action of Bitcoin in the years ahead. I don't know if that's happening this cycle or next cycle, so to speak, but that is something I'm looking out for. So for short-term price action, I will hold to my projection of 307,000. I still think we're going to see a lot of inflationary pressure in the US dollar. I don't know if it will be registered Q4 of this year, or if it could be extended out into, say, Q1, Q2 next year.
Yeah, time passes fast. We're not that far away from the year end. So I really want to understand what could be the headwinds that would take us to 300,000.
There's kind of two counterforces here, and we have to understand what inflation, first of all, means. It's a term that's very ambiguous.
Right.
People think price inflation, asset inflation, currency supply inflation.
Truth.
When I refer to it, I'm specifically referring to currency supply inflation. So this is arbitrary increases in, call it USM2 as your general proxy. Although those metrics have all been changed and discontinued and everything else in the wake of COVID. What's happening, in my perspective, in the world is that uncertainty is increasing more and more and more. So if we just consider that money is, one of the definitions of money is as an insurance policy on uncertainty. We see a lot of people sitting on the sidelines. This is individuals, institutions sitting in cash, right? Banks are heavily positioned in cash right now. Everyone's expecting there to be some type of downward movement if central bank policy intervention does not keep its current pace. At the same time, you're creating inflationary pressures on the dollar, which is that the dollar would be losing purchasing power relative to goods and services. There's this counterbalance in that there's a huge reservation demand to hold dollars, to hold the optionality that it gives you in the event we have some downward volatility in the marketplace. That's why I think that the dollar could continue to strengthen for some time until we see some shocks like this. So in terms of the headwinds that get Bitcoin to a $307,000 mark, should we have any deflationary shock, then people move back into the market. That could be enough to actually decrease the deflationary pressure on the dollar and put inflationary pressure on it, such that Bitcoin, the asset inflation associated with Bitcoin, resumes and we get back to a $307,000 mark. Diminishing of the dollar, we're not really going to see that until kind of Q3, Q4 of this year. It typically takes about 18 months for this to wash through the system. And this really just started in March 2020, the central bank response. I'd still be looking for a, October, November shakeout of the US dollar. I don't think much needs to happen, actually. You need to get kind of some fear out of the market, some uncertainty out of the market, some people off of the sidelines. That would help. But even if that doesn't play out, I still think that price target is in the cards for Bitcoin.
How important is that Wall Street acceptance towards Bitcoin here in order to get those price projections you want?
I think Wall Street acceptance, quote unquote, is important, but Wall Street acceptance, in my mind, is premised on self-interest. Hydraulic pressure created by central banks, where they're forcing all market actors further out along the risk curve in search of yield. You're seeing public pensions invest in equities and junk bonds and things of this nature. So clearly today, at the furthest end of the risk spectrum is Bitcoin. It's like a 70 or 80 vol asset. The more fiat currency supply inflation there is in the marketplace, the more demand it will create for inflation resistant money, which is Bitcoin in a nutshell. So you're injecting hidden risk into other asset classes, and that pushes you as investors that have they have pensions, for instance. They have guaranteed, or defined benefit that they have to pay. They have to hit a certain return to pay out the benefits that they have promised to their pensionees. Riskier and riskier positions taken. So I think that Bitcoin is just going to absorb a lot of that bid in the market. Let's
zoom out now and talk about the 2030s, where you even have a bigger, much bigger, bolder call, 12.5 million. For every Bitcoin. You could see fiat money not existent at this point. I'd like you to elaborate on that, because is that a world of central bank digital currencies then? Like, what do you mean that we wouldn't have fiat anymore?
Particular price call, I think it was a 2031 price call. And I should condition it by saying it's a $12.5 million nominal Bitcoin price projection. But in today's dollars, in 2021 dollars, it would only be feel like $1 million. So $1 million USD purchasing power Bitcoin, which essentially, that implicitly means that I'm projecting the US dollar to inflate against Bitcoin 90+%. And this is based on what I look at as rate of change in currency supplies. So when I look at these things historically, law of accelerating issuance and depreciation in the currency market. So we have a debt-based financial system that creates more demand for dollars than the supply can ever keep up with. So it requires exponentially more dollar production to satisfy the demand for debts that are created in a fiat system. So last year we increased, again, call it USM2 as the proxy, over 30%. The numbers are closer to 40%. Looks like 38% last year. I would expect that rate to double again by mid-decade, and then double again before the end of the decade. So we're going to be looking at over 100% year over year dollar supply increases by the end of the decade. And at this point, I think the dollar is it's going to be a prelude to hyperinflation of the US dollar. So I would expect, and during this time, weaker national currencies would be collapsing into the dollar. So weaker economies will dollarize as they have a currency crisis. People will try to get into anything that's more stable. The dollar in its position of global reserve currency will benefit from a lot of that. But I still think Bitcoin will continue to eat most of the monetary premium. The dollar is going to absorb a lot of it, but the Bitcoin is going to be absorbing from the dollar that monetary premium as well. So I see by 2035, I would expect the US dollar to be in a hyperinflationary state.